Right now, there's over $400 million in leveraged Bitcoin positions lined up for liquidation. And you got to understand, this isn't just idle capital. This is pure rocket fuel, just waiting to launch the next major move for the entire market. So here's how we're going to break this down. We'll look at the high stakes, then an upside trap you need to see, and a hidden floor of support. We'll analyze that recent cascade, put it all together in a macro synthesis, and then give you the final outlook. Now, the crucial thing to get here is that this huge amount of money creates what we call price magnets. The market now has a very real financial incentive to push toward these specific levels, to trigger a chain reaction of forced liquidations. Okay, so we just saw a brutal $3,000 drop in a single hour. But here's the real puzzle. The largest, most obvious pools of money, they were completely ignored. In this explainer, we're going to show you exactly why that flush out was just the warm-up for the real volatility. If you find this kind of analysis valuable, go ahead and drop a like and share this. First up, let's look at one side of this battle, the upside. This is where a massive wall has been built by leveraged longs. Traders betting with borrowed money that the price is going to go up. And this heat map, wow, it makes it undeniable. Just look at this intense yellow band right here. That's an enormous cluster of leverage. We're talking $88 million concentrated right above the $98,000 level. This makes it a prime target for a big market move. But, this isn't a one-sided bet. The market is in a serious tug of war. So let's look at the other side of the trade, which is building a completely contradictory scenario, a really powerful floor of support just below the current price. This chart shows the other side of the trap perfectly. You can see the density of the color between $89,000 and $90,000. That confirms a huge pool of short positions, traders betting the price is going to fall. This creates a really formidable liquidation floor, which means the market is now caught between two powerful opposing forces. And both of these zones are so dangerous because they can trigger what's called a liquidation cascade. Think of it like a line of dominoes, right? A small push in one direction forces the first positions to close, which then pushes the price further, toppling the next position and the next, and creating this violent chain reaction that just feeds on itself. Okay, now let's really focus on what just happened back on January 18th, because this event is the key to understanding what's probably coming next. You can see the move right here, this really sharp vertical plunge from 95.5 all the way down to 92,000. It completely wiped out the traders who were levered locally. But, and this is important, pay close attention to what didn't get hit. Those massive yellow bands we just identified, the ones above 96K and below 90K, they remain completely untouched. So here's the cause and effect. Because the market already took out the easy nearby money, the spring is now coiled even tighter. The price is now positioned for a much bigger move toward one of those macro zones. We're tracking this stuff daily, so follow us on Twitter for real-time updates. All right, let's just pull back for a second. How does all this short-term, derivatives-driven volatility stack up against the fundamental health of the Bitcoin network itself? And here is the critical context. While the derivatives market is creating all this noise and all this volatility, the underlying Bitcoin network itself, well, it has never been stronger. The hash rate, that's the network's total computing power and its security, it's at a record high. The next difficulty adjustment, which is a great reflection of network health, is set to increase another 3.6%. So because these fundamentals are so strong, it tells us the current price action isn't about some shift in Bitcoin's long-term value. No, it's a purely technical hunt for liquidity. To stay on top of this kind of deep dive analysis, make sure you subscribe to the YouTube channel. So after putting all this data together, what's the final takeaway? Well, the picture couldn't be clearer. Bitcoin's price is literally trapped. It is pinned between a massive liquidation wall of long traders up at $98,000 and a really dense liquidation floor of short traders down at $90,000. We're talking hundreds of millions of dollars at stake on both sides of this thing. So, to put it bluntly, that recent shakeout, that was just the appetizer. Now that the local leverage has been cleared out, a move to hunt one of these two big macro zones isn't just possible, it's highly probable. The market is now looking for its next big score. And that leaves us with the final multi-million-dollar question. With the board reset and these huge liquidity pools basically acting as giant magnets, which way is it going to break? We'll be tracking it really closely. To make sure you don't miss our next breakdown, subscribe to the channel, and hey, drop a like if you found this valuable. We'll see you in the next one.